Hello, peeps. We go with a bit of a theme, central banks. Financial Market News Asia gives us an update. Bank of Japan Shirakawa says Japan's recovery realistic, but watch out for risks. Tokyo, Bank of Japan Governor Masaki Shirakawa on Tuesday offered a slightly brighter outlook for the Japanese economy, saying that the odds are increasing that a gradual recovery will take shape in the first half of fiscal 2012, in line with the central bank's main scenario. Japan economy expected to return to moderate recovery path, he told reporters after the Bank of Japan's board stood pat on monetary policy at its two-day meeting that ended this afternoon. Our recovery scenario seemed to be becoming more realistic, thanks to diminishing tail risk in Europe, Shirakawa said, referring to a low-probability event that could have major adverse impact on the economy and markets if they were to materialize. In the United States of America, we have the Federal Reserve raises growth forecasts for 2012. The Federal Reserve's interest rate setters have raised their forecasts for the U.S. economic growth in 2012. They are predicting growth of between 2.4 and 2.9%, up from 2.7 projection in January. Blah plus. They have also lowered their forecast for the unemployment rate to between 7.8 and 8% from the range of 8.2 to 8.5% in January. But they left interest rates unchanged and said they do not expect a rate rise until late 2014. Yesterday, Bloomberg, Bank of England's king, says UK economy will start slow recovery this year. Bank of England Governor Mervyn King said business surveys indicate the UK will have a slow recovery this year as officials prepare for a meeting next week on whether to extend stimulus for the economy. It's a patchy picture, but there are indeed significant signs of a recovery coming, King said in an interview on BBC Radio 4 today. We see that in the business surveys, and I think also in the unemployment data, a reasonable view that would be that we would start to see a steady and slow recovery coming during the course of the year. Same yesterday, Financial Times Draghi predicts 2012 Eurozone recovery. The European Central Bank still expects a gradual Eurozone economic recovery in the second half of this year, Mario Draghi, its president, said, after the Euro's monetary guardian left interest rates unchanged at the record low of 1%. Recent signs of a significant weakening in the Eurozone economic activity were not yet sufficient to justify a further loosening of monetary policy. Mr. Draghi indicated after an ECB governing council in Barcelona, one of the two meetings a year held outside Frankfurt, its home city, interest rates remained at historically low levels and accommodative, are supportive of growth. Right, let's balance that central bank bollocks with a chart. Now, it's titled Asia x Japan's aggregate exports by destination. So what we have is exports going out of Asia, the manufacturing heartland of the world, but not Japan. They've taken Japan out because they skew the results. So it's the rest of Asia. And where are they exporting to? And how are those exports doing? Just look at the shape of it. Obviously, the great big willy down-pointing thing in 2009 is the Great Recession, but it all recovered, didn't it, so nicely to all areas, US, EU, Japan, Asia ex-Japan, and the rest of the world. But what has happened since 2010 through 2011 and is happening now. It's all going to shit, isn't it? It's really pointing an awful long way downwards. We've got interpretation and extrapolation, and it all says it's going to shit. Now, I think that these central bank johnnies are trying to jaw us away from facts like this. Something somewhere along the line has to turn these lines back upwards. Or this means that people in the West aren't buying the things in the East. That means consumption in the West is going to go down, GDP in the West is going to go down, and the East is got to get bitten in the arse because they are not selling stuff to the rich West people. Something like that. In other words, I take more note of this chart than the blah 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 from the central blankers. Bye.